Good morning, everybody. Let's start the show. Okay. So I essentially run a company called hitstocks. I call it the noiseless algo for various reasons. So what I'm trying to do here is automate the entire trades in the stock market. So right now we are majorly dealing with Nifty and Bank Nifty, these being the indexes. The volatility is more, the movement is more. So I'm giving out trades based on few levels. Excuse me. Guys, give me a moment. I'll just switch over the audio.
Hello, is this better? Venkat, you're unmuted. Can you hear me fine?
Hey, Dinesh, can you hear me?
Yes, I can hear you now, Venkat.
Okay. Yeah.
Is my voice clear, everybody?
Oh, it's very clear, crystal clear.
Okay, I've just got few messages saying voice is not clear, voice kam aa raha hai.
Okay.
Okay, let me just see. Now all okay. Okay, cool. Fine. So I'll start. I'll restart. Okay, so hitstocks.in is the company that I run. I call itself a noiseless algo. Venkat, I request you to go on mute once again.
Okay.
Thanks. Okay, this is clear. So what we are doing is automating trades in the stock market. We we do various analysis in the stock market, in the live market, and we go ahead and find a good spot to enter into a trade. And from there on, it does many things like, a stop loss is always necessary to contain our losses. So the algorithm finds a spot where you can book your losses in case if our trade is not going our way. And also various other things like stop loss trailing, which essentially means that when the trade is going your way, you have to restrict your losses or restrict your or take as much as profit that you can. So there is a concept of a trailing stop loss that comes into play and so on. So the system is automated to do all of those. Right now we are in a stage where we are fine tuning the entire application. We went live a couple of months back, and when we analyzed the data, it didn't seem to be working as well as it should. In short, there were many a number of times when stop losses were being hit. So we went back to our tables and we worked over again, and we have come with a better algorithm now, which is still under a fine tuning process. We do find a good entry point and an exit point, but we are still to fine tune it to fit various other perspective of the market. I'll quickly walk you through what all do we do and how do we do things. So firstly, let me come to the disclaimer first. So we are not a SEBI registered institute. We have just started it. We would acquire SEBI registrations as well as in time as the time goes. But for now, we are not a SEBI registered. So every call which is provided is based on logical understanding and analysis of the market. The market tend to move in any direction. I mean, it can change direction anytime. You have always heard in newses, but the news that you hear is always about a day old, or whatever happens during at the end of the day or something. But in a live market, it may change swings any at any point of time. So it is very, very volatile. So I would always suggest, in case if you're taking a trade, it is always better to have proper risk management in place. So that is the point number two that I've covered. So um, every call is provided on a understanding, but ensure that you follow proper risk management. And every profit or loss occurring is the individual's responsibility. You would not be coming back to hit stocks and saying that I've made a loss and you're liable for it. No, that's not any service provider would take guarantee of. Okay. Now, the next thing is this channel, the WhatsApp channel that I'm running right now is presently free. At any other point of time, what we would do is when the algo is launched, I would convert that into a subscription based channel where you can subscribe on a monthly basis. I've not really put my thought around the pricing, but that's what the plan is. So anybody who opts for algo does not need to be in the channel, but you would be getting regular updates through that channel. And anybody who's precisely looking out for the calls like the last week that I had been providing, so for that we would be going for a subscription model. So that's what the plan is. And right now, I'm integrated with two brokers, Fires and Finvasia. So Fires, I just had a comparison yesterday, and Fires seems to be pretty costly. But the reason why we chose Fires was because uh, the broker interface, the API interface which the broker gives, that was free of cost. And I recently came across Finvasia, who also gives the API for free. And um, also is a broker demat zero commission demat broker, so you do not have to pay anything as charges. So I have listed down few points which I would be sharing you in this PPT as well. So essentially, to say here, there are two major vendors that we have tied up with, and I'll tell you what is the purpose of having Fires on board as well. When Finvasia is totally free of cost, why do we still have Fires, is something that I'll explain you while we go. Okay, moving on. So, as you know, all these trades come under business income. This is considered as a short-term capital gain, and this would be under the 30% bracket. So, as and when it is business income, you need to pay taxes for it. And as it is considered as a business, you can show your expenses to as in the form of computers, any procurement that you have done based on your business, any internet bills or anything that affects your business, that can be considered. I'm not the right person to guide you here. Please take help of your CA in order to file these taxes. But I just wanted to be upfront that, say if you're earning 100 rupees as profit, definitely for sure 30 rupees is going to go in as your income tax. And there would be a considerate brokerage from your demat brokers as well. We'll go and see how we fare well with brokers in the upcoming slides. Okay, I told you who we are and what do we do. So I'm going to skip this step. So why hit stocks? Firstly, with hit stocks, as I mentioned, I'm giving you an automated trading system. So the major issues that traders face in the market is emotional bond with the trade that you have taken. Whatever trades that you have taken, you tend to find a way or you just keep praying for it to go up. But at times, if the market is not going your way, and there are very good chances, so the best thing that we need to do is just book a small profit, small loss, and come out, or exit at a cost to cost for whatever you have purchased, exit at that same price also, so that we are not occurring a loss. Okay, so the automated trading comes in hand for these kind of emotional people, and people with no trading knowledge, and even the people who doesn't know how to operate the demat accounts and stuff. This is all good examples, and Hitstocks will have you covered.
Dinesh, sorry to interrupt you. Are you sharing your screen?
Yes,
Are
I
you
am.
presenting? Okay, we
Uh,
are unable to see your
not
screen.
able to see?
Yeah, Dinesh,
Oh,
we are
sorry,
not.
sorry.
Yes,
Oh,
Yeah.
Dinesh,
sorry,
that's the
sorry.
reason why I dropped a message also the same that I am unable to see your screen.
Okay, I am not checking the WhatsApp and okay. How about now? Do you see now?
Yeah, I
Just
can.
now, yes. Thanks.
Okay. Okay. My screen is on a slideshow mode and hence I'm not able to see the messages. Okay, let me just quickly go chat. Okay, unable to see the presentation. Sorry, Shubho. Okay. How about now? You're able to see the screen now?
Yes, yes, thank you.
Thank you. Okay. So yes, so there are a few things that I mentioned. The disclaimer, we are not SEBI registered, and I talked about the calls and how every profit or loss is your individual responsibility. And I talked about how my channel is free right now and how I would be following a subscription model later as we go. I talked about the income tax, and I asked you to check with your CA on the taxation part. I spoke about what we do and why hit stocks. This is where we are, and a few challenges that we always had been facing. So this is where we have you covered. So I want to talk about the trading versus investment. So what essentially everybody knows about the market is you buy low and you sell high. This is all what we know about the stock market. But there are different ways we can trade. We can trade on a falling market. We can trade on a rising market. We can even put in our option strategies, which would be good for a sideways market. This is something very advanced when it comes to trading. So these are the things that majorly as a invest. What most of us do is, as an investor, we buy low and wait for it to go up. So something that you have purchased, you wait for it to go up, but you do not know when to exit it. Also, that is also a major issues when it comes to investment. So those people who have purchased stocks for investment on a long-term basis, even they have to take a proper decision on when to purchase it. You should not consider buying a stock when it is already high. There are good chances that it falls down because there is a cycle for every stock in a period for which it would go up or go down. So ensure that when your stock is on a higher side, it is better to avoid and wait for it to fall down, and then only you purchase. And then when it is rising, that is when you go ahead and purchase a stock. This is totally when considering investments. The other thing that I wanted to talk about was options and futures. This is what we deal with. So what we do is we basically trade on derivatives, which in the trading language is called the options. So what are derivatives? Derivatives are something that does not have a strength by itself, but it depends upon the parent stock for the strength. So, for example, Nifty is an index. Nifty 50 is an index. Bank Nifty is an index. So there are derivatives which comes out of it and which forms an option chain, and you are trading the options there basically. And it has got nothing to do with the futures. Oh, sorry, nothing to do with the stock by itself. But how is an index formed? An index is formed through consolidation of different stocks with different percentages. So I'll roughly give you few idea about it in upcoming slides. So, and I'll also few of the things that you can see on screen when it comes to indexes. I'll also show you how a option chain looks like, and our entire strategy that we are following is based on option chain. Okay, now what are contracts? So these are all trading basics, and uh, I'm sure this would be overwhelming to most of you, but hang on. I would explain more, and I would also kind of recommend and tell you if what we can do together to crack this thing. So the next thing around is about contracts. So what really happens is with the indexes, we have weekly contracts. With the stocks, we have monthly contracts. That's how NSE provides it. So what are weekly contracts? So obviously a contract for a week. So here, let's talk about Bank Nifty as an option. So Bank Nifty, it starts every Friday and it goes on till Thursday. So if you ask a trader for a date on a Thursday, he would most probably deny you because he is glued to the market. On Thursday is when you actually you see a lot of movement in the market, and all that the trader want is a movement, a volatility, so that he can go ahead and trade against trade with the volatility and make a good income out of it. So there are people who double their profits, or uh, their investments on the expiry day alone. So those are different option strategies that they apply and make. So we'll talk about. I don't see any point in talking about that right now. So we would discuss it in upcoming days when we meet, and we'll discuss more there. So that's about contracts. So buy or sell. As I mentioned, for as an investor, you're always looking at an option to buy the stock on the low and sell it on the top. But as an investor, as a trader, you would be looking out for both opportunities, where you buy when it is rising and when you sell the stock and do a virtual sell and exit out of the sell when the market is falling. So this is called a trading. This is the proper technique of a trade where you make money both the ways. So you have a upper hand over the investors who always have to depend upon just one side of the market. But here you have both the sides and you can make money there. The next is about the entry point. I mean, that is just nothing but when is the right time to enter the stock market. So that is the algorithm that I have written. When is the right time to enter the stock market based on many analysis of the option chain itself. The next ones are the stop loss. As I mentioned, every trade has to be protected. I mean, you should be good enough to go ahead and book a small loss and come out of the trade in case if it is not going your way. And you should also have this capability of moving your stop loss to get you at least the minimum profit which we are looking at. The next thing is about a trade, about the exit. So these are the exit strategies that we need to discuss. So if you would have observed over the last week, what I do is I give you a recommendation of where to buy and what would be a first target, what would be a second target, and so on. So there are good chances that we don't hit all the targets which are provided. But so what we would have to do is I say that, this is the first target. So once we have reached the first target, we do a partial booking and look out for trailing the losses, trailing the stop loss, so that we at least take away whatever profit that we have made in the first target. We'll discuss more about that in the coming coming slides and coming sessions. The next thing that I wanted to talk about was trade reversal. This is nothing but where the market turns. So whenever a market turns, we would have to exit our existing positions and we have to create new positions. This is the trade reversal. What are the trading instruments? As I mentioned, we deal with Bank Nifty and Nifty. This is the most volatile and the indices which are having a lot of volume and a lot of movements. So this is the best trade that best instruments to trade in. However, we should also be looking at stocks at a later point of time, and we would ensure that we include stocks as well. The next one is the commodity market. Now, this is on an international level, and the market timings are very different. So, you would see a slight change here due to the daylight savings. Earlier, it was 9 a.m. to 11:55 p.m., and now it has switched back to 9 a.m. to 11:30 p.m. based on the daylight savings. So, with the new logic that I've implemented, this is unavailable for now. So we would consider this at a later point of time. Okay, so hitstocks intro. I think this is too early for you to get into it, but I would briefly tell you about what we do. So this is my site hitstocks.in, where I would be providing all the this is your front end. This is what the user would see. So this is my dashboard and stuff. This is what I really mean to explain in this particular slide. So majorly what you would have to do is take care of the trade settings. So here, what is your default broker? I've set it as Fires, or I can set it as Finmacia. So there are a few things that I would have to provide. So I'll tell you the advantages of Fires and Finmacia. So if you were to see here at Fires, I'm not asking for the password. There are few things that I'm asking for is the app ID and the secret key. You do not have to enter password in the Hitstock site. But whereas from Finvacia, whatever APIs they are providing, we need to have a password. You need to give me your enter your password. This is one disadvantage that I see. But having said that, I've taken necessary precautions to encrypt this password in our database. So this is one thing that I can assure you of. And these are few other parameters which would be playing around. So I would go ahead and explain you how to get these values and feed it into our system. So these are majorly two brokers. The other thing that I'm asking is about a trailing stop loss. Like say for example, now let's take an example where you have purchased a stock at 100 rupees and you are trailing your stop loss by 15%. So what does that essentially mean is, say your stock has reached 150. From 100 that you purchased, you have reached 150. The machine would automatically calculate 15% of the profit, which is 50 rupees, that comes to 35. So the stock that you've purchased at 100 rupees, um, there would be a stop loss that would be kept at 135 rupees, which is 15% less of whatever is the market price right now. So in short, what you're doing is you would be getting at least 135 for sure. So now after a while, it moves to say 200. From 100, it has gone to 200. So what is the 15% of 200? What is 15% of the profit that we have? It is 85 rupees. That is 100 rupees of profit, and 15% we are trailing by the loss. So the stock would stop at 185. But there is a catch. I'll tell you how. Suppose, as an example, say we have purchased here, and you see this, the stock has gone up here and come back here again on this particular candle. So in case if your trailing stop loss is somewhere here, it would go ahead and hit the stop loss, the trailed stop loss, and it would book your profit. Do not expect it to come here and then trail. So this is something as a, so what I mean to really say is be generous with the with the trailing stop loss. Ultimately, what we are also targeting, what we are also providing is the target for each and every trade. So say if from here when I took a trade, my target was somewhere here, I will definitely, once it reaches here, I would definitely go and hit a target here and book your profits. So your stop loss will automatically get cancelled. So in short, what you're getting is a bigger trade, but all that you're doing is protecting your profit by ensuring that there is a trailing stop loss, and just wanted to ensure that you keep a generous one so that it doesn't get hit very often. Now, there is no real calculation about what would be an ideal stop loss. I mean, it is just up to you. Like a person who says that whenever there is a 5% drop, I just want to book and come out. If that is his logic, it would very well serve so. All right. I hope I'm making myself clear. Any questions so far? I'll just check the chat if there is any. None. So I'm assuming that everybody is understanding. Thank you. And so there are certain settings that you can do once in a day and one time. All right. And I also wanted to focus upon one option that I have said here, exit trade by end of day. So why do I ask this? So as I told you, we are trading, but these the options trading, we can carry it forward up till a week. But there is a concept of firstly of a theta, which decays. So here, I would call options trading as a double-edged sword, where on one side, you have to fight against the time as well. So the longer you keep your trade, the more chances are that you lose the entire money. Also, I wanted to bring you a concept of a gap up and a gap down opening. So here, the markets are always dependent upon other markets too. Like, for example, today we had a good rally, up rally in the Indian market, but say during the US hours, there was some negative sentiment which was built, and the US market fell down. So that would affect the other markets, like Australia opens just after US. So it would affect their market, followed by Japan market, and then finally Singapore market would also be affected. And we majorly depend upon or SGX Nifty, which is the Singapore market, is major go-to point for reference when the market opens. And many a times I have even shared um, images of what is SGX Nifty looking at this point of time. Is it open? Is it healthy or is it weak? And how can we expect our market to open based on the SGX market, SGX Nifty, which is the Singapore market? Because Singapore is the one who's just 2.5 hours before us. So there would have a lot of consolidation happened between the US to Australia, Japan, Taiwan, those area, and then finally coming to Singapore. So uh, there's a few hints that we can pick up, but again, this is not in our hands at all about how the market opens. So again, coming back to our question about exit and trades by end of day, I would always suggest this to be kept as yes, because we don't want to carry our positions to the next day, which would which would have a theta decay, which is the fight against the time. And secondly, about we do not have to take unnecessary risk about the gap up or gap down unless you're very sure that tomorrow, say today, we have had a good rally and you're expecting something positive to be coming out of the US market as well. You can hold your positions but minimal for the next day, and that's how we go about it. Okay. Now, I have just spoken about a statement saying that hold minimal positions. These are not designed by the algo. The algo just understands, should I exit the trades by end of day, yes or no? If you say yes, all the positions will be exited. If you say no, all the positions would be carried forward. So I would request you to intervene in between and book half your positions in case if you are doing this, just to be on a safer side. Okay. Now, the authentication of fires and Finvacia. So again, going back to the site, on the dashboard, if you are choosing fires expires your token on a daily basis. So this is the fire setup. You have to generate token and generate an auth every day before 9 a.m. That's when the markets open. They reset the authentication every day at 6 a.m. So somewhere between 8 and 9, that is where you could go ahead and um, reset your token. This is the most important button of this particular site, wherein you say that I want to start my trade. Once started, it will be started for the entire week. By the end of the week, I would come and explicitly stop the trading so that whatever automation has created, I would charge a commission based on that. And once you pay that, this would automatically be set to started again. So we are not there yet, but this is what is upcoming in future. So just wanted to explain you that. Okay, so fires and Finvacia, there are few videos which I have uploaded on my site hitstocks.in. You would see some videos which are here. This pretty much explains whatever I've explained now about the dashboard. There are few things about the fires app ID and secret ID, so on. Okay, and how is the trade settings done, how to create a token and this ones. I would also share you screenshots about how to configure Finvacia with the site. Okay, moving on. How do we execute trades? So as I told you, there is an entire module written for option chain analysis, and based on that, we would go ahead and take the automated system would go ahead and select a price check. It would see what is the amount of money that you have in your demat. Based on that, so I'll explain this a little more. So this is a profile check about how much do you have in your account, and based on that, it would take a trade. Next is the order placement, and then I talked about stop loss and modifying the stop loss to trail them and so on. And then finally, it would place orders into the Shunya platform, which is the Finvacia platform. So let me give a while and talk about the profile check. So when I say profile check, what I'm doing is I am going ahead and asking and probing how much is there in your account. So say you come up with, I get a response that you have got say 10,000 rupees in your account. So what would I do? Do I put the entire money into a single trade? I would preferably say no. So I'll just take this as a 50,000 just for a better understanding. So what I'll do is I would pick half of what you have right now. So that would be 25,000, and for 25,000 I would purchase shares. I would purchase lots. So for example, let's take a rough average of rupees 400 per bank nifty lot, and bank nifty comes in a lot of 25. So what I would get is one lot I would get is for 10,000 rupees. So for 25,000 I would get two shares essentially. 5,000 would be left out. So I'm only taking a trade for 20,000, not 25, although I'm looking at 20,000, 25,000, but my two trades are coming for 20,000, and I don't have enough bandwidth for the third one. So I would take two bank nifty trades right now. So immediately after that, after 5 minutes, you are now in the bank nifty trade, and this is ongoing. So after 5 minutes, I also get a call on nifty. So similarly, now I have utilized 20,000 and I have the remaining 30,000. So out of the 30,000, I pick up another 15,000, which is 50% of it, and I would invest on Nifty. So here, what happens is, so let's assume that 100 rupees is the Nifty range, and it is of 50, lot is of 50. So we would have 500 into 50, which is equal to 5,000 rupees. For 15,000, I would get three lots. So this is how I would keep on going. So now assume that I have reached my target. 400 was where I began, and I multiplied it. The stock went up by 25 rupees, and that's what my target was. Say I've achieved the target, and I have booked the entire profit. And so I have 45 into 25, whatever is the profit. I'm not too good at maths. It is 10,625, and we got a profit here of 625. So 10,625 would be credited back into your account. So now assume that, okay, now let me take another scenario. Here, say it was a PE trade. Okay, I'll explain you what is CE and PE. So we take option CE when the market is about to go up, and we take a P trade when the market is about to go down. So here what I found was, say assume that I have taken this one, Bank Nifty 40,000 CE, which expires on 29th of March. Okay, so this is how I would be providing calls, or I had been providing calls as well. So what I'm essentially asking you to do is go for the Bank Nifty 40,000 call option, the expiry being on 29th March. Clear? So here I purchased this for 400 and I exited at 425. I got a profit of 625. Actually, it is 625 into 2, because we took two lots here. Our this logic where we had 50,000, we utilized 25, and we got two lots for 20,000. So the profit is also 1,250. So that's what our profit is. So we would be putting our capital back into our demat account, which would now be we took 15,000 here. So out of the 25, we already had 10,000, and we also put in another 11,250. This is what our balance will look like now. So now the next trade that comes in would be, say, a bank nifty P, because I told you that whenever we take a C, it goes up, and whenever it is going down, we would take a P position. So the next trade would be a P trade, for which we would say we would go something like bank nifty 39,900 P on the 29th of March expiry. So during this trade, when we got this trade, our capital is 22,250, and we'll take 50% of this capital, um, and we'll take a trade. So assume that this is at 150 rupees. For 150 rupees divided by 25, divided by the price, howsoever number of shares you get, we trade with that. This is exactly how the algo picks up trades and executes them. Any question? Anybody who has question can raise their hand. I'll unmute them to ask. Okay, cool. Seems like no questions, so we can proceed. Okay, what's in for resellers? I don't believe there are any resellers here. What's in for professional traders? So pro traders, you would have a strategy of your own, which you want to automate. So depending upon various conditions, like what is your strategy, I can help you automate that based on how easy or difficult it is. There would be a charge for it, and there would be a different commission sharing percentages and things like that when it comes to algo. Okay, so what's next in hitstocks? Improvise on strategies. This is something that we work on it every day in and out. So whatever good strategies or whatever new strategies can be applied, we would keep applying that. Hitstocks will also extend to Nifty 50 stocks. I have started a pilot of it, and I've started with 5 to 6 stocks, which has got a bigger moment. So we can concentrate on stocks as well in the coming days. The next one is swing trading implementation. This is for a very non-risky trader who who wants to do a swing trading. The swing trading basically is just about your entry, and you keep the share for 15 to 20 days and take it out. So this is one which I wouldn't really suggest, because uh, whenever you purchase shares, what you're doing is you are purchasing a complete share for a complete money. Say you're purchasing shares of TCS. TCS is at 3,000 odd. So you say you purchase 10 shares, which is 32 into 3,200 into 10, which is 32,000 approximately. And say within, say, a few days, you would only see it moving 10 rupees or 20 rupees. So all that you get is some 200 to 300 rupees, depending upon the movement. The movement is not too big, as you see in the options or as you see in uh, intraday also. So even in intraday, you cannot keep a long profit, a long margin. So that is the reason why I depend more upon options trading, which definitely is a double-edged sword. But if you do your analysis and math right, you would be able to fetch a lot more than what we have. The next things that I want to talk about is a very big topic, which are called option strategies. Now, what are option strategies? This is a strategy-based trading where you buy both call and put. I mean, what you're actually depending upon is the time decay for your income generation. So while you can see a profit of, like, say, 8 to 10% on an average per day in futures and options, you would see only about 2 to 4% as an average in option strategies. Now, please don't go by numbers and mark them in your mind, because the market is very, very volatile. On one day, you may earn 1%. On a very good day, you may even earn 30 or 40%. There are people who double the investments also per day. But let's not go there. Let's just be grounded for now. Okay. The next things that Hitstocks want to think about is a long-term investment. This would not be any automation. This would just be suggestions given, and our dashboard essentially would carry few uh, few things about what stock is at a 52 weeks low. What is a good what is a good time to buy those stocks which are on a 52 weeks low, because that is the lowest that the stock has seen. And talking a little bit more about these long-term strategies, there are cycles for every stock. So we have to detect that, and based on that, I would be providing you calls about where exactly to begin a trade and ride it till how long. So that's about the investments. Crypto and forex, it is a very far-sighted fruit. We can just keep looking at it for now. Firstly, there are many legal issues and complications around it. The other thing is our demat accounts. We can't directly fund a crypto. You have to buy bitcoins from any third party, whom I personally do not trust. Although there are many people who are already doing it, doing the crypto market, but this is something that is very far-fetched, far-sighted fruit for me. I don't even want to look at it right now. So moving on, what are Hitstocks charges? So this is the interesting part. I would like to explain you a little about this. So what we do is, as I mentioned, we give trades on a weekly basis. So at any point of time, your demat account is holding your money. There is nothing being transferred to Hitstocks or any of its subsidiaries or anything like that. All your money is in your demat account. All that we are doing is checking what is the amount that you have. Based on that, we take trades, we book profits, put it back into your demat account. We do not have anything at all apart from this to do with your demat account. The demat account maintenance also is your strategy. How do you want to do it? Say on a weekly basis, you want to withdraw your profit, you're most welcome to do that. And say you have only kept your limit of say 15,000 for trading. So let it be at that. So at the end of the week, say you have earned a 5,000 profit, you take out the 5,000 and leave that 15,000 behind. That's the easiest and best way of doing it, is what I feel. And what we do is, what we at Hitstocks do is, out of your percentage, out of your profit, we would request for a 10% commission. We are only requesting, we are not taking it. So as I mentioned, the stop and the start button. So at the end of the week, after Friday, end of the day, after the MCX market also is closed, I would go ahead and disable this button to be a start button, like you see now. So when you hit on the start, if there are any payments pending, it would ask you to clear off that first, and only then would it let you to start the trading. So essentially, before coming to the next week on a Saturday, between the weekend, you would have to go and clear this out and go ahead and get ready for make the payments and get ready for the next week. That's how it is. So yeah, again, if it is below 1 lakh, it is just 10%, and if it is greater than 1 lakh, it is 12.5%. Now, by default, this applies to the indexes, the indices, that is Bank Nifty and Nifty. Say tomorrow when we launch the stock options, wherein we would target the Nifty 50 stocks, we would be doing. And again, this is all totally based on options and futures trading only. So we are not going to do intraday. We are not going to do investments on a long term. Those would all be subscribed model, wherein if you are only requesting for those options, you would just have to pay an amount and keep a track of it yourself. There would be no automation around it. So if you add stock options also, that you want stock options also, it would be plus 5%. So ideally it would come up to 15%. If you add MCX as well, another 5%, which would be 20%, 20 and 22.5 if it is greater than 1 lakh. So that's how it looks. I am pretty reasonable with this because there are people who straight away go and charge 45% of the commissions, 45% as commissions. I just don't want to get there. But this is for our business survival and to grow our business. This is the model that we are looking at. So next things, I wanted to quickly bring to you about the broker charges. So what I've done is I have just taken a sample amount in across 4 different brokers. Out of that, Shunya and Fires are the one that we have integrated with. So Zerodha, if you would have brought one option for say 100 rupees, sold it at 110 rupees, a 20 quantity. This is just an example. You would have to pay a brokerage of 149.17. Similarly, we do the same math with Shunya. You have to only pay 3 rupees 73 paise. They have zero brokerage and they have only the STT charges, which is for the government. Similarly, if you do that with Fires, you would have to spend 198 rupees as brokerage. So but the only catch is Fires are giving free APIs. You do not have to pay APIs in order to automate your trades. Whereas with Zerodha, you have to pay 2000 per month. So this is something that you are saving with Fires. So ultimately, it may come to almost the same. ICICI Direct is, I've just given a demo just because they are a complete broker. These Zerodha, Fires, and all are called discount brokers. And Shunya, there is MStock, there are Trade Plus, a few brokers like this. Even Kotak is coming up with Zero, and they are called zero brokerage demat accounts. But most of them do have a starting or joining fees as well. But Shunya doesn't even take that. So that is the reason why I chose Shunya over anything else. So here are the DMAT registration links. And to get started with hitstocks, when it starts, you would have to also go ahead and register yourself here with the user registration link and get started from there. So this was about the algo and the stocks and all that. Now, see any questions? I'm open to take any questions that you have. Anybody?
Dinesh, Venkat.
Venkat.
Yeah. When you say about automated the stocks, right? So we are just putting the amount, in the demat account. So everything else, right? The buying and selling of, this nifty put options or call options, everything is automated using your, algorithm or, based on your algorithm, right? So no need to take any actions on a particular day, right? We just need to come there on the initially first day of the day. And just do we need to do any action on the day? Like, you said we need to input our username, password, something token.
Right. So, Venkat, here is how it works. So you are exactly correct about when it comes to algo. Okay. That is, the system will decide when to take a buy call, when to take a sell call, when to go ahead and place a trade, when to trail the stop loss, when to hit the loss in case if there is one. All that has been taken care by the algo.
Okay.
Okay. The only thing that you would have to do is, again, there are things that I'm thinking of even overriding because, when I say algo, I don't want to put a pressure upon you to go and make a research on what will be an ideal stop loss percentage or how do we trail it and so on. But it is always better to have your inputs as well. At any point of time, you say that you feel that, the algo is not returning you a profit that you're expecting. Say you are just comparing it with a friend of yours who's doing a normal trading. So what he does is every five, from 100 it has reached to 140 or say 150, which is like a 50% returns on your investment. So at 50 you just want to book it. You don't want to let the algo go down and book it at 145. You're not ready to bear that loss. So you can tune your with this particular parameter, you can tune your algo to give you the maximum profit. But I told you, right? As I showed you in an example, the market does not move straight up. Okay, it would go like in bits and pieces,
Yeah.
up and down, and then finally it would reach its destination. So there are good chances that if you keep a very small trailing stop loss, your stop loss would be entered a lot more earlier than it is supposed to.
So the stop loss, everything is again, taken by the algorithm, or we need to keep these values.
No, so here is how it goes. Whenever you first place the order, okay, your first
I'm not going
placement
to
of
place
the
that.
order.
I'm not going to
I
place
mean,
that.
when the algo, I meant to say when the algo first places the order,
Oh,
there is a swing low that it calculates. Like for example, uh, okay, let me come back and share my screen again. Able to see? Are you
yeah,
able to see?
yeah, yeah.
Okay. So assume that this is one stock. Let it be any. We're not bothering. So what the algo has picked is what the algo does is the exact things what we would think about, like buy it at low and sell it at high,
Hmm.
right? So for my algo example, I would take this as I would take this line as my lowest point. Say the algo has calculated that, and
Hmm.
it was thinking that this particular point is the highest point.
Hmm.
Okay, so what we do is we buy it here, and it has made a swing low here. You see this? Okay,
Hmm.
if you see, just observe this portion here. This actually means open, high, low, and close. Okay, so if
Hmm.
I take this candle, the open is at 39,562. The high that it made is 39,562.10. Okay, and the low that it made was 39,429, and it closed at 39,493.5. Okay, so this was the lowest point caught by our algo in
Hmm.
this particular trend. Okay, so what I'm saying is I'll buy from here and I'll ride till here because my algo, I have to also get a target when I take a trade, right?
Hmm.
So what would happen? Firstly, there would be a stop loss which I would write over here. Over here, I would mention that this is my stop loss. If the stock goes below this point, 39,424, I'll sell it off and come out. I'll book a small loss and come out. My
Hmm.
capital is saved. Okay, and I'm ready for the next trade. But assume that it is going up. So what I would do is, like say for example, at this point, now this is a very clear scenario. It just went up. It almost reached a target. 39,621 was the high that it made, and we were assuming that it will go up till 39,663. Okay, so
Hmm.
at 621 you have placed a 5% or say 1%, just to be a little more practical here. So 1% of 39,621 is around about 396 points, almost
Hmm.
396 points. So assume that it went down. So you see it has made a high, but it came down again. So 39,621 or something is what we were looking at. So you see this, it closed here. Look at the close on the top. Look at this portion to get the close value. Okay, the close value was at 39,542. So before coming to 542 itself, at 621, 621 was the high, and 396 points is what we were looking at as 1%. Okay, so if it goes down from the top to 396 points below, it would immediately exit from there.
Okay. So, Dinesh, my question is, the stop loss and everything will be decided by the algorithm, or, the
Yes,
values we kept, right, in the configuration somewhere you showed on screenshot,
yes,
right? So
yes.
that will be based on that values, or, algorithm is going to decide on its own.
Okay, so there are different ways of looking at it. Right now, what I was also looking, firstly, I was asking to mention your stop loss
Yeah.
trailing. Okay,
Hmm.
so this is something that you have put. Okay,
Yeah.
and I will go by this. I will go by this because every user is different. every user, if now somebody in this scenario, he had put, um, this is a big figure. 39,663 is a big
Mm,
figure. That is the reason when I take 1%, you get such a big number, 396. But
mm,
usually it is not like this. Let's go by this notepad logic of say 400 rupees. Okay,
mm,
so say here you have put 10% as your trailing stop loss, which is 40 rupees. So
mm,
assume that over here you have gone say 395 rupees, and 40 rupees below is what you have kept. That if it goes below 40 rupees again, just book my profit and come out. That is what you're saying. But somebody,
mm.
say Mr. X, who's on this call, he mentions it as 1%. So out of the 400, it went to 400, and then it comes 4 rupees below. At 396, he wants to book a profit and come out. Is what you are displaying here. But from the algo, what I've got is I am still looking at 425 as a target, or say, I mean, here I took 425 as a target. Say I'm looking at 460 as the target. So according to my algorithm, it has to go up till 460. But you as a user are not ready to wait till it reaches 460. You want to ensure that you come out at a little profit also is fine for you.
Okay.
Okay, so that's what I mean by doing this.
Okay.
Okay,
So these are the default, values when we start, or do I need to input these values?
no, you would have to input this value. Any new user would have all this as 0.
Okay. Okay.
Okay,
And Dinesh, my next question is, in a day, right? Let's say we set up everything, and your algorithm, takes how many trades actually?
it depends
Oh.
really. So say if the market is sideways, for example,
Mm,
let me bring here. Okay, so this is the range that we have come across with our algo. So what we need to do is sell here, buy here. Okay, here is the trade that we exit and make a profit here. Now this is again our range that we have defined. So it goes down, we buy here again, and we will trail the stop loss and say book a profit here. Okay,
mm,
and if the algo wouldn't feel that this is a good trade, because it has not touched this point. This is a buying area, this is a selling area.
mm,
In a very plain in a very plain example, this is what I wanted to explain. Okay, so I have to mark this area as my sell area and this area as my buy area. So as and when it reaches this area and it starts to fall, we are going to sell here. When it comes here, when it comes to this area, and
mm,
we are in a buy position now. Okay, here in
mm,
this area, right? We are in a
mm,
buy position, but it is still going down. So what would happen is, remember, we have had a stop loss that we book here. This line is for a stop loss. So
mm,
we buy here, and the trade is not going in our way. But again, now let's come to the person who has set our trailing stop loss at 5%. So this over here, it say we brought it at 400 rupees. On this candle, it has reached 420. Our man has put a 5% trailing stop loss. So 420. 5% of 420 would be 20 rupees ka 5% would be 1 rupee. 1 rupee ka loss. So at 419, he books and gets out. He's in a better position here. But you as a user have put say 20%. It has not. It will go only down. It will only book out when it hits that 20% target. If you have say if you were very generous, say you have put 50% as this thing. So it is still going down and you're not booking it because your stop loss is bigger than your percentage, right? So it will hit the stop loss and come out. Are you
okay.
able to understand this, Venkat, or
Yeah,
did I
not
explain it well?
but no, not completely. But it's okay. It makes sense to me. Okay. But going back to my question, like on an average, actually, like I know market is sometimes very volatile.
Mm-hmm.
How many it will take? Like let's say market is going up, it put a buy call means C, and
Mm-hmm.
then it's sold actually when it reaches the target.
Correct.
But again,
Right.
from the point, again, it's algorithm knows that it's coming down. Again, will it take
Correct.
any sell call and again buy call, anything like that?
Yes.
So it
Yes.
continuously
It will
do.
take. Yes,
Okay,
it will. It will.
okay,
So there would be no trades after 3 p.m.
yeah.
Okay. After 3 p.m. because then we don't have much time in the market, right?
Mm-hmm.
So there will be no trades, but say a trade has been.
Yeah, between 9:15 to 3 p.m., right? Like, if it is market is too volatile, on average, how many trades it will take your algorithm? It's just 2 calls or 3 calls. Like, I know it will varies, but typically,
Yeah,
like,
but
average.
on an average, you can look at 3 to 4 calls.
Okay, 3 to 4 calls. Okay.
Yeah, it could be either way, up, down.
Okay.
Okay, so that is another reason why I chose a zero broker. Okay, now with every trade, if I go back to my screen, with every trade, you have to pay this amount. So
Yeah.
assume that you were paying zero say 4 trades, and this is like assume that we are working with a small capital of say 25,000. Okay, so every trade, say I said around 4 trades, right?
Mm,
So it is 150 into 4.
yeah.
Okay,
600.
300, 600 rupees is something that you would be spending only on brokerage,
Mm,
regardless of making profit or even making loss. For them, it is brokerage.
mm,
In fact, no, there would be a slight changes. If you want to go and check zero the brokerage calculator, you can put a loss value also. You'll be able to figure out how much is
mhm,
it. But all in all, don't look at anything else, but just look at Shunya.
mhm,
For a trade, it is not going more than 3.73. I mean, that when it comes to percentage, it is 0.03 or something.
mm, mm.
Okay, so that is the reason why I'm more comfortable working with Shunya as a demat broker.
Okay. And it makes sense
Okay.
actually to go to the Sunya, right? Even though if you are paying, 2,000 rupees per month, something for the APIs.
Shunya is not charging any API charges.
Oh,
It
okay.
is Zerodha who's charging.
Okay,
So
okay.
with Shunya, this is the only. This will vary definitely. Say if you put, let's do that as well.
Obviously preferred, broker will be Fire Asia only, right? That
Yeah,
Phoenicia.
for me it is, yes. So let's assume this. Let's take a say we brought it at 100 rupees and we sold it at 90 rupees. Say 50 is the quantity. Okay, so here you see what is the fees. Total cost of trade is 0.68. Now
Oh,
let's go by say 110. We are selling at a profit. Okay, here it is 0.81. Now let's take a big one. Like say we brought it at 100 and we sold it at 600. Okay, still, see, you have made a good profit here. 500 rupees profit, 500 into 50. It is 2,500 rupees profit. But your cost of the trade is only 4 rupees, 3.86 to be precise.
yeah, understood. Yeah.
You want to do that in Zerodha? We are doing with futures and options. Okay, we brought at 100, we sold it at 600, and we were looking at 50. Okay, net PNL is this. Your clearing charges, your total taxes and charges are 84 rupees. Okay,
Mhm.
this is how you can do this math by yourself. Just go to zero the calculator. Any
Yeah.
broker that you're looking at, go to their calculator. They would definitely be providing one.
Okay.
Okay.
And let's say we started trading and, algorithm, let's say in few days, it's making, let's say, let's, in the worst case, let's say it's making some losses.
Hmm?
So what is our strategy actually? If you are, are you going to charge anything on the losses?
No,
Like,
no, 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 no. So for losses, I am totally with you. I mean, how can I charge you on a loss that you're making? Right,
yeah,
and
yeah, yeah.
it is not even I mean, I wouldn't even go to that, I mean, see, the strategy is something like this. The strategy is you are going and purchasing at the low. I mean, the algorithm is able to pick up this area.
Mm,
Okay,
Mm,
from this point it is always supposed to make a profit, but again, this is market, it can do anything, right?
mm,
So what are the things that we need to be aware about? You need to be aware about things like how does it change, how does it reverse, and is the algo really able to handle it? So yes, the answer is yes, because as soon as I place an order, as soon as when I say it's the algo, when the
mm.
algo places an order, immediately after that, within 3 seconds itself, I am placing the stop loss.
Okay.
Okay, and from there we are looking at the lowest most point to purchase. It is always our entire strategy is that, right? Buy on smaller price and sell on higher price. So the smallest price is what the algo is looking out for.
Yeah. And let's say
Okay.
if I keep, in the Demat account, let's say, let's say I kept, 1 lakh. Okay.
Mm-hmm.
So how it will decide, how much amount it has to take and, do the trading? Like, is there any, I have to decide on that one or algorithm,
No,
algorithm will
no.
do?
I explained you this concept, right? Say you have
Okay.
50,000. The first trade I'll book for half the amount,
Okay.
and next
Off.
half I'll leave it. Yeah,
Okay.
next
Okay.
half I'll leave it. I'll wait for the second trade. In the second trade, again, from whatever I have in the balance, I'll take 50%.
Okay. Okay.
This cycle goes on. So
Okay.
assume that after half an hour we reach the first trade that we had taken that has reached target. So
Hmm.
that would be booked, and your money would be deposited back along with your profit into your demat account. So now you have a bigger sum to
But
play
it
with.
will not be done immediately, right? It will take, I think,
It is
trading platform.
immediately. No, no,
Is it?
no. For options and trading, it happens immediately.
Oh, is it? Okay.
Yeah.
Okay.
So yeah, that is another drawback. Whenever you do a cash and carry, you have to pay the entire cash, and then when you sell that stock off, it would take you like 3 days, T+1, T+3.
Hmm.
That's what usually brokers come up with.
Okay.
Yeah, except in the case of MCX, I see people delaying it by 1 day or something.
Hmm. So in the options,
Okay.
will they give any margin? Like, let's say if I keep, 1
No,
lakh, no
no,
margin. It has to be cash
no
only. Okay.
margins. Yeah,
Okay.
it has to be. I mean, see, just imagine this. Just imagine this. Bank Nifty is at 40,000, close to 40,000. But
Hmm.
if you purchase a share, let me just show one. For example, is it that only Venkat was listening very closely? Nobody has any other questions, which is very surprising. I kept this for a longer time just in case, uh, there are a lot of questions that is coming in, and it's only Venkat who's listening. Okay, so let's do this. So now let us firstly look at what is the futures price for Nifty. So Bank Nifty is at 39,395. Okay,
Hmm.
so if I were to buy an option for it, 39,950, 39,400 it is. So the strike prices are in hundreds, in multiples of hundreds. So you would have 39,300, you would have 39,400. So the closest to this one is 39,400, and assume that I'm buying a CE call, and I'll also take a P and keep it in the watch list. So
Hmm.
there are big concepts of in the money, at the money, out of the money, which I cannot really cover and finish in this particular session. But
Hmm.
that is something that I wanted to provide as a class itself. But yeah, that's for people who want to learn. So now assume that what is this around about 39,400. So if I say okay, and you can't trade on indexes, you can't trade on indices, but you will have to trade on futures. Okay, there is another concept of futures. So if I say Bank Nifty here,
Right? That's on the stock futures, right? Not on the indexes, like for the
index
futures.
also, there are futures,
Oh,
on
oh,
indexes also. So this is the
okay.
March future, this is the April future, and this is the May future, and all of
Oh.
them would be divided by a small number of points. So
Hmm.
from the spot there will be a difference in the index as well, in the future as well. So here
Hmm.
at the index level, you're seeing that 39,395. but on the future you're looking at 39,383.
Mm-hmm.
Okay, so what I was coming to is 39,383.20, 39,383.20 into 25. 9,84,580 is what you are supposed to be paying for a single lot. Okay.
Oh,
Now,
oh.
okay, you are not going to come with so much of amount, or assuming that most of my users are freshers. Nobody is uh,
Mm,
that capital rich, to come over. So
mm.
even then if they come over, I'll give them a better option, not a future really. Okay.
Okay.
So but if I were to buy a option based on that, if I were to buy an option based on that, say I am looking out for a CE trade, a call trade in
Mm,
Bank Nifty, which is expiring on 29th of March, and 39,400, which is closest to the price. If I
mm.
see the price is 331 rupees, okay, which means to trade this 331 in, sorry, 331.4 into 25. This is what I would have to actually spend on getting a one trade. Okay,
Yeah.
but okay, and how does it move? What is it that would happen if I purchase the option? So to show that, I just wanted to bring up. This is overwhelming, guys. Y'all just take it as an information only, because I just wanted to give you this information about what is an option chain and how does it work.
Mm,
Okay, so this is the option chain, and we are looking at Bank Nifty. Okay, so here we are looking at 39,400 as our strike price. Okay, so there are a lot of things: OI, change OI, volume, IV, LTP, blah 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 blah. These are all big points. There are all big topics which are very big in itself. I don't want you to get into that, but this is what I'm looking at, and this is the analysis that I do to make trades as well, right?
mhm,
So yeah, so what I'm saying is, if you would have purchased, what we were looking at was 339,400, which we have at 331 rupees. If you would go for another option, 39,300, we would get it at 387, and so
mhm.
on. So there's a big, very big topic. I don't want to even get you overwhelmed with this, but the point is this, that if you come with a smaller capital, this is what is the best option to trade with if taken sensibly. Okay, if you do it with blind eyes, for sure you'll not survive. It is very difficult, or you can call it the big daddy of all the trading.
Okay.
All right. Yeah, so your question, I hope I have answered your question.
Yeah, yeah. And Dinesh,
Okay.
one more thing is you said that at all these trades will be like, options trades will be on a single day only, right? It will not be carried forward to the next day or, in the next week, right? So
Unless in the options, in the trade settings, you have said exit trade by end of day, you say no.
usually what is the
So
recommendation actually? Usually what is the recommendation? Because
I would
algorithm,
always,
based on the algorithm, right?
yeah. So I mean, based on algorithm, based on manual trading, I don't carry forward my trades at all.
Yeah, yeah. I like that idea
Okay.
actually. I like that
Yeah.
idea.
Yeah. So, but some people who are like hardcore traders, there are many whom I have interacted with who were interested in the algo, all that.
Mm,
So, all those people whom I have interacted with, few of them were really saying, that the best options of making money is, okay, I'll give you by example how it would have worked. So some people do recommend this buying and selling it on the next day. They call it, there is a term for it called BTST, buy today, sell tomorrow.
mhm.
Okay? And I am not confident with it, so I wouldn't even have anybody go through it. Okay, now let's quickly, I'll make this a bigger time frame. So this is what is happening. This is the Thursday. This is where the market ended on this day. This is where the market ended. Okay,
Mhm.
on Thursday at 3:15 to 3:30. This is where the market ended. The next day there was a slight open. It opened here, which was slightly higher. Okay,
Mm-hmm.
so now looking at the trend, if you would have said that I would buy a put option and keep it for tomorrow, you would have firstly got a jolt because it opened up on a high.
Yep.
So suddenly, wherever you were like say 500 rupees profit, you would show up as minus 2000 to begin with. Okay.
Mm-hmm.
Okay. And then as you progressed, there would have been a theta decay, which would have shown minus 2500.
Mm-hmm.
I'm giving you an example, not exact figures.
Mm-hmm.
It would, as time progressed, right? Because I told you, you are trading against the time when you're trading options,
Yep.
when you're buying options. Okay,
Yep.
there is a similar strategy of selling the options, which is buying, which is you're trading for time. I mean, as in when your stock grows older by days or by weeks, you tend to earn more. So that is the option selling strategy, but that comes with a higher investment as well. Okay, but at the end of the day, you would have recovered and you would have gone back to this plus 1000 or plus 1500 by end of the day, looking at the market trend. But all this all this while during this area, right? During this area, you would be totally disturbed by mind if you were to be following this trade and looking out for profit. So that is the reason why I would say that don't go by this one. So what we would have ideally done is our algo, if it's said that at this point of time it is going to go down, on the new day itself we are going to take a sell positions. I'll tell you how that also would be taken. Okay, assume that you have started your day here.
Okay.
24th March 9:15. Okay, our day begins here. So there is one concept that we call as range breakout. Okay, so what I'm going to do is buy the high and low of this, mark the high and low of this particular candle, and whichever side it breaks, I'll go that way. Okay, so here, if you actually see, the candle hasn't closed, but it was going down. So here, Algo made a quick analysis and said that this is the resting point for it. So if you actually see, I have taken a call trade, which I'll show you. Okay, Algo decided that it is not going to go down from here. From here, it has to travel up. So we mark. These are not small candles, by the way. Okay, I've just shrunk it. So
Mm-hmm.
this is how it looks like. So we marked the up and the high and low of one particular candle of the opening range, and we it was going down. So I did not go for a sell trade. The reason being, firstly, it has not closed it or it has not broken it like the way I wanted. And then I see that there was a support here. This is how a trader uses the language. They call this line as a support line. They call this line as a resistance line.
Mm-hmm.
So we found that we had this one, and this is Bank Nifty. I'll show you my profit and loss. Bank Nifty on 24th, we had taken a CE in the morning. We had taken it at around about 414, and we went up to 470. We made a profit. We made a profit of 60 odd rupees, and we had taken two lots. So we had profit. So this was the investment basically 10,330, and we made 2,800 out of it.
Okay.
Okay, this is the profit and loss for last 1 week. The last 1 week where it was when I was actively giving trades in the group.
Okay.
Okay, so now that brings me to another tutorial as well where I'm almost out of time, 11:30, but I'll quickly tell you how do we take trades. So when I would be giving something like this, I would say that Bank Nifty 36 39,600 CE. So all that you have to do is in whatever broker terminal you're using, just go ahead and search this under options.
Mm-hmm.
This is trading view, sorry. This is trading view, but go to fires. Go here and go under options. Okay, and you would get March 29th is the expiry. You should always choose the closest expiry and hit plus. Here, now I would have given a range where you have to purchase. Like say, for example, it was 230. So you would go ahead and place an order either by in fires. It is very easy. You can trade through the chart. Otherwise, what you have to do is um, on some of the brokers, you would have a buy here or buy here. You would have so This is the buy option that I talked about. So 25 at 266. 266 was the default one. So let's say 231. This is what I took. So your required margin is 5,777. So this is how you take a trade. Depending upon broker to broker, you have different type of screens, but basically this is the exact logic how what is to be followed to. Uh, this is all when you are doing a manual trading. Now, as I'm not ready with the algo, I'm giving out trades in the WhatsApp group, right? If you would have observed. So when I say this, this is what it means. When I say that, buy Bank Nifty 39,500, see, this is what I really mean, and this is what you would have to be following.
So we need to put a market price order there, or how do we decide the price? 231 you kept right there.
Yeah,
How do
that
we?
was a limit order. So that was a limit order that I've put. If you simply want to buy it, right, you could go ahead and simply, uh, you know, here from fires, it is easy as I mentioned. So you can
Okay,
simply go to the buy window and you can buy it at market.
okay,
Okay.
okay. But
What
do
I
you
usually do is,
you will give always limit order, right? You always give limit order, or
yeah, I would actually, what I would be looking at is, see, when I look at the chart now, at least manually, when I'll be looking at the chart, I would be looking at something like this. So here, my algo would have alerted me here saying that this is the lowest,
Mhm.
right? Because this marked the lowest, and then from there on, it is going up, right?
Mhm.
So for me, this is the lowest. So I would say that, buy it anywhere between 333 and say somewhere around 356. Buy anywhere between that. This is a good buy range. This is when I'm giving out manual trades. Okay. When in an algo, it would find the lowest. And then when it starts monitoring it and find that the lowest is not going to be broken, it would take half the trade here. Say if it does resumed and, uh, continue to fall, I still know that this is still the good range. So I would take half of the trades again and then apply a stop loss below this.
Okay,
Okay. So that's how the logic of the algo is.
okay,
And I would find maybe say this is the first target, and rest of them goes like in that flow.
okay. Thank you,
Okay,
Dinesh.
okay, yeah. Any more questions? Anybody else?
Yes, it's Sunil here.
No, 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 thank you.
Am I
I just
audible?
wanted to say that it is have to go with the algo, right?
Sorry, say that again.
So what you showed was a manual intervention, but I was thinking
Yeah,
more of the
yeah, yeah.
algo.
Yes,
Okay,
no,
okay.
see, okay, the main purpose of having this call was I was giving calls on the WhatsApp group till my algo is ready in the interim period. I was just giving this calls, so people really didn't know what to expect and what to do with that. There were many people like that, so hence um,
I am one of them. Okay.
yeah, so right, Sunil,
Not a
I've
problem.
just
Not a problem.
yeah, Sunil, I've sent a request to unmute.
Okay, I'm audible now.
Yes, yes, you are.
Okay, okay, yeah, sir. So I have this Angel One account actually,
Mm-hmm,
which is in my mother's name. So,
mm-hmm.
what is the API charges for Angel One? Any idea? Like, will there be API for that Angel One?
No, there is no API. Right now, I have not integrated with Angel One.
Okay.
Secondly, it has got API, but then again, it would fall into this category of, it would fall into, you can see my screen still, right?
But Dinesh,
It would,
No,
that
you're not sharing it.
we have to go with Finisha only, right? Because we have integration with only two brokers, correct? So we can't go with
exactly.
other
No,
broker.
yeah, but see, if Sunil is now interested in Angel One, so I can't provide him the API, or maybe I'll have to wait till I develop, total integration with this one, with Angel One. Till that time, what I can give Sunil is the interim calls, like I'm doing right now. So over there, he's free to go and make his own trades, but
Okay.
there will be no intervention through the algo. Algo would not be able to reach Angel One.
Done.
Okay. So
Okay,
again,
okay.
Angel
So
one would be
we have
falling
to do
into
it
this.
manually, right?
Yeah,
Manual
you will
trading.
have to do it. Yeah, you'll have to do manually.
Okay.
So this would be your charges, like roundabout. They fall into the discount broker category. They are no zero brokerage. So yeah, it is this amount that would be there.
Sharing the screen, I think I'm not able to
Oh,
see anything.
sorry. I was just going back to my old slide itself.
Okay.
See now?
Yes, I can see now.
Yeah, I was just going back into the old screen and I was showing that they are into this discounted broker category, which would be like 149 on an average,
Ah, okay, okay.
right?
Okay, one more thing, like, do we need to have any eligibility to enable these futures and options, like this
Yeah.
particular trade?
Yes. So what they usually do
Uh-huh.
is they try to figure out that you are capable of options trading by looking at your bank statement or your ITR or
Yeah,
so on.
exactly.
So
When
yeah,
when
but
when I
remember
am
one
trying to activate it, it was asking for the 6 months bank statement
bank
actually.
statement. Yes. So
Yeah.
that is mandatory. That is mandatory. All the brokers are doing it. Okay.
Okay, okay.
So that is one thing. And the other thing is you should ensure that you have all of them enabled. You should have the futures and options in NSE, BSE enabled, and you should also have the MCX enabled.
MCX, right? Okay.
Yeah, that is for crude oil trading. Not happening right now, but it may soon happen. So I just wanted to show you some screenshots about this one as well, Finvicia as well. So once you log into Finvicia, you would have to go and there is the name initial icon and click on API key, and you would have to put in your you would have to generate this API key which you will be getting from here, copy it and keep it, and you would have to register it in hitstocks. You would have to enter those things in hitstocks.
Yeah, got it.
Similarly,
Uh-huh.
this OTP, this is all related to Shunya, Finvacia.
Okay, okay.
Yeah, you would have to update it here under trade settings, Finvacia. You'll have to update all these details here.
Okay, okay. So coming back to the eligibility, like what exactly they look into? Like, I mean, okay, I will upload the 6 months bank statement. Do they? I mean,
That's all.
they need anything like, okay, if your earning is this much, then only I will
No,
activate your.
mostly no. Mostly they don't. Mostly what they do is they look out if you are a income tax payer or no.
Okay.
That's what they look out for.
Okay. If not, I mean, what I'm doing is like I'm opening this account in my mother's name, right? For specifically
I
her, right?
doubt
In the sense she don't pay this
have a yeah, she
income
doesn't
tax,
have a
right?
regular source of income. If she doesn't
Uh,
have a regular source of income,
okay.
I mean, if your mom is working, definitely she would be filing taxes and all of those.
Okay.
It would be okay to go ahead and open it in her name. But
Okay.
if she's not earning,
Uh,
and there is no ITR filed, all those they wouldn't enable it.
okay. Okay. So got it. Okay. So
Similarly
I
with
mean,
the child
because
account.
the regular trading I can do it actually in her. I mean, the regular stock trading I'm doing. I
Oh
was
yes,
specifically,
stock trading you can do it.
yeah.
That is see,
Um,
this is a little risky when it comes to when you compare it with the normal trading. This is very risky. So I mean they are just assessing your risk factors
okay.
while you do. Yeah.
Got it. Thank you.
The risk, what you said, right? I just want to give an example, not an example actually. So when you say about risky, right, your money will be fully gone actually within, like, if you waited for that, that theta something you said, right,
DK.
Dinesh,
Theta
it
DK.
might become zero. Your whole value of
Okay.
investment becomes zero, right? So that
Yes.
chances are very high risk. But in case of
Yes.
stocks, that kind of risk is not there.
Exactly. That is true. So that is the reason why we are doing daily trading. So what we
Yeah.
do is, this. Essentially, what we look out for, whatever, how is the bank nifty and nifty performing? That is the number one thing that we look out for. And from there on, we go ahead and try to figure out which way is it. So now This is an ideal case. This is how every day, this is like BAU for us. Okay. So here the market opened at 9:15. The market opened at 9:15, right? Here there is a top and a bottom level set. We don't have any idea about what the market would look like today. Okay, we are not doing any fundamental analysis. We are not going to go back to what did SVB Bank do, or what did HDFC Bank do, or what is the crude price oil today. This is all out of question for us. All that we are going to do is a technical analysis. So what does technical analysis essentially mean is, we look at how the candles are being formed and what is it supposed to return to us. So if you would have just gone by the candle pattern, right, you would have thought that okay, it is a total bullish day. There is no point where the market will go try to go up. So there comes different other sort of analysis. Now uh, you can't always go by one type of analysis. You should at least do two or three technical analysis or technical indicators together, and do kind of come to a conclusion on how. So if it was a normal trader, what he would have done is, there is indicators here. Okay, so let's take it RSI as an indicator. This is one of the indicator. So what he would do is, he would look at this day and say the day started here. So here RSI is falling. I don't know if you guys can see my screen. So
No,
our
no,
day
we can't.
started here. Oh, sorry. Again, is it possible?
Yeah.
Okay. So what I did was, this is how a person normally would trade. Okay. What I did is, I went to indicators, which is helping me, right? So I would pick up anything. I picked up RSI. Pick up super trend. Super trend is an ready-made indicator which is there. So what does the super trend indicator say is, from so and so day, there are many settings that can be changed and done. I'll just leave it to the default. So here it has always been saying that it is a sell. So at some point of time, when the day opened, you looked at the super trend indicator and it said that it is a sell. You are in a sell range by looking at this particular indicator on the top. So you sold from here, but as soon as it came here, you would have got your heart in your mouth, because you would be seeing a loss. Okay. So the one that you purchased here at 400, over here it would have come to like something around 280, 290 something. So this is where you will get scared and you will exit. Okay. Or maybe somewhere here where the loss is less or something. And then if you're still following this, you will feel that it is a sell day and you'll keep on selling. So actually, if you would have followed the super trend indicator, it would have given you a good movement if you look day wise from where it opened and where it closed. So the job of a trader is to figure out if he can get a trade here, which he can ride up till here, which again will fall up till here. So he essentially takes one trade, two trade, three trade. Third one will go on a loss. So if you take your risk as 1:2 also, like say for example, for 10 rupees you're taking, for 10 rupees of profit you're taking 5 rupees of loss. You won two times, so you made 20, and you lost once, which you lost 5 points. So overall you're in 15 points profit. Does that make sense?
Yeah.
Okay, any more questions?
One last question is, how do we get registered to this Finnish?
So if you go to my site, I've provided a link. It's dogs.in. I've got a link to Finvicia here. Okay. And this this particular presentation that I was giving, right?
Mhm.
I will be giving you the slides as well. So in this also, I have put the Finvicia registration link
Okay.
and the WhatsApp group link. If somebody is not joined yet and want to join, this is a WhatsApp group link.
Okay.
So all this is in the interim period till the algo goes live.
So when are we expecting this the go live?
I have actually gone live once due to, I would tell you that, the strategies that I was working on, that didn't really work in a sideways market.
Oh, okay.
Okay, I'll tell you what I had done. Okay, this is one of the indicator. Chandelier exit is, yeah. So this is one of the indicator, and I was blindly following this indicator. Wherever it tells me buy, I used to buy. Wherever it tells me sell, I used to sell.
Mm-hmm.
Okay, this is one of a good indicator. I don't say no, but then you know what? There are different styles of trading. So this guy is depending upon a breakout trading. There is a concept of a breakout trading. So what does breakout trading means is, for him, this specific portion, right, where I said buy from here and sell here, that is not a trading zone for him. For him, the trading zone is after it has completely and accurately crossed the resistance line and it is going up, that is when he is taking trades. So for him, it is a resistance breakout trade. That's how you can mention it. So it broke the resistance, it failed, and it started coming down. So ideally, I would have taken a trade here. As per his logic, I would have taken a trade here. It went up till here. This is not even covering my profit. Or if I were to go with a broker like Zerodha, it has not even covered for my brokerage charges, and then it started falling. So here I got scared. I exited. I'm in loss. I've lost the brokerage. I've lost the loss percentage as well.
Mm-hmm.
Okay, so my logic didn't seem to work. It did make money. It did make money a couple of times, number of times, and I'll share those screenshots also with you, which a few of my friends took and made profit. But this to me didn't look consistent. So I went to another logic.
Okay.
Okay. And yeah, just to share the screenshot. I mean, this is amazing figures. I don't know how you want to put it. Like, see, ideally, you never had more than 20,000 in your account. At any point of time, it is not taking more than 20,000. But it is,
Mm-hmm.
look at the profits that you are making. Okay. If you put it in percentages, one trade gave you 48%. Okay. Now, very, very, very crude comparison that I want to make it is with the FDs. Like FD, how much does it give you per year?
3.5%. Sorry,
I'll,
six, around 6.
6. Okay. I'll put it as 7. Okay. And how much is this? 48.76. Okay. I don't even go there. Let's take the smallest one.
Go ahead.
11.16 is what we registered. Okay. This is almost say not double, but almost 1.6 times. 1.6 times I can say into 20 working days or 22 trading days. I'm keeping it as 2 days on a loss also. Okay. So this is the times that you would have made. This is the percentage that you would have made, right? So here, actually, whatever you were earning in 1 year, here you have almost made it double in a single day. All in all, on a monthly at present, at what we were looking at from the last 1 week. 1 week in the sense, Monday I did not give out any trades. I was not trading on Monday. So Tuesday to Friday, Tuesday, Wednesday, Thursday, and Friday, these are the calls that we took, and this is what we achieved, 35%. If I take an average of all of them. But if you take it in a literal sense, you never invested more than 20,000 and you have made 17,000 odd profit.
Mm-hmm.
Okay, but these are all rosy figures. I don't want you to go by this. Never
Yeah.
keep this as an expectation. Okay.
Yeah.
I mean, I would be really happy if I make 1% or 2% also per day. That makes it 40% per month, and I'm good with that. Okay, but the algo is capable of doing a lot more. Okay, any more questions?
No, I'm good. Thank you, Dinesh.
Okay, yeah, I think there are very few participants left. So, all right, unless there is any more questions, I would end this call on a happy note and welcoming you all to the world of trading. I wish and expect everybody to be a part of my algo trading community, where we can do it. We can do it. Okay. Okay. Thank you, everybody. Take care.
Thank you.
Have a good weekend. Bye bye.
Bye.